Sooner or later, almost every client of ours comes with this question. They start the list of needs, goals, financial budgets, and so on until they add something like, and yes, any advice how to minimize my taxes will be very appreciated. I love honesty, by the way. And there is no shame at all. It's normal and legitimate. So here's 3 ways I can think about to try to minimize your Italian tax bill in a legal way, of course. Number 1 is deductions. In Italy, it's plenty of expenses, personal and business related, you can use to make the tax basis thinner. In case of huge costs such as, let's say, medical bills or home improvements, it's usually given a fixed percentage of the total incurred, and you can use this amount as a one-off, like 19% or 50 to 65% divided in 10 rounds in 10 years. Same thing for educational costs, rent expenses, private insurance, and dentists, for example. If you are a freelancer, independent contractor, or business owner, as long as you can motivate your costs as necessary or related to your activity, you can deduct between 20 to 100% of those expenses against the gross income. But in many cases, it's mandatory to avoid paying cash, if you know what I mean. Number 2, tax rates and tax regimes. Believe me or not, in Italy, the tax rates and the tax regimes do not work as a one-way only. There is no one-fits-all plan. For rental income, for example, you can choose from a flat 10 to 21% on your gross, or a progressive 23 to 43% with some deductions provided by the law. For businesses or freelance income, on the other hand, you can choose between a regular 23 to 43% with the VAT annoying obligation, a flat 5% on your gross for the first 5 years, and then it goes to 15%, or a 70 to 90% off on your personal income for 5 to 10 years. I'm talking about the regime impatriati, by the way. In short, there is no unique answer to what is the best tax regime. You must consider your total income on a worldwide basis, the impact of your personal and business expenses, your client's location, activities carried out, and personal assets, plus your commitment in years with Italy, 2 years, 5 years, 10 years, how long you're planning to stay here. Number 3, I would say time. Maybe this one is pretty surprising, but time is almost the main issue you must consider before moving to Italy. Timing in general. Spending more or less than 183 days can or cannot take you into the taxable group. Spending 5 to 10 years in Italy can be the best fit in order to maximize the benefit provided by, let's say, a 7% rate for pensioners, regime forfettario or regime impatriati, but the core issue comes after that. What will your life look like after 10 years? Are you sure you're gonna trade your Italian dolce vita for 23 to 43% of your income, your 0.2% of your investment, and 26% on your passive income? Minimizing your taxes in Italy, like starting to eat clean and following a strict diet. You have to ask yourself 2 basic questions. Number 1 is, are you able to sustain the diet plan or the tax plan for as long as you want? And following from that, is really saving taxes what you're looking for? There is always a price to pay in terms of risk, liability, or expensive tax firm to work with.